In this video, I will be sharing a complete guide on how you can use Heikin Ashi charts for your trading. I will cover everything from basics of Heikin Ashi charts to a highly profitable trading strategy that you can use with exact rules for entry and exit. So before we dive into this video, if you are new to the channel, make sure to hit the subscribe button and press the bell icon so you will be notified when I will upload more videos in the future. Just like candlesticks, Heikin Ashi is also a charting technique that helps us understand the movement of price over a particular period of time. So why should we use Heikin Ashi charts instead of regular candlestick chart? The biggest advantage of using Heikin Ashi chart is that Heikin Ashi helps us in identifying the trend with ease. It's simply because of the continuity in Heikin Ashi that candlesticks chart simply cannot offer. For example, look at this chart. Here is the candlestick chart of the buy movement on Euro USD, and here is the Heikin Ashi chart of the buy movement on Euro USD. Now let's say that you enter a buy position from here. Then as the price moves on, we see red candles appear on the candlestick chart. These red candles were small pullbacks on the price, but when you are trading in real time, these candles can make you think about your trade and you can fear the worst. So you may exit your positions on one of these candles. However, if you used Heikin Ashi charts, you can see that Heikin Ashi candles stayed green throughout the price move. Therefore, you could have held on to your buy trade throughout this price move. This is what Heikin Ashi charts are used for. They are used to spotting out clear trends in the market. Now let's see different types of Heikin Ashi candles. In an uptrend, we see green candles with very less or no wicks on the downside. This indicates that the uptrend is very strong and there are virtually no sellers in the market. These candles represent strength in an uptrend. When the uptrend becomes weak, the green candles start to have lower wicks. This shows that the sellers will be entering in the market very soon. Another thing to notice here is that the bodies of the green candles also become smaller. This also shows that the uptrend is becoming weaker. In the downtrend, we see red candles with very less or no wicks on the upside. This indicates that the downtrend is very strong and there are virtually no buyers in the market. These candles represent strength in downtrend. When the downtrend becomes weak, the red candles start to have upper wicks. This shows that the buyers will be entering in the market very soon. Another thing to notice here is that the bodies of the red candles also become smaller, which also shows that the downtrend is becoming weaker. Lastly, there are these doji candles that sometimes appear on the charts. They generally form at the top or at the bottom of the move. This type of candle indicates that the momentum of the previous move have been completely lost. Hence, it gives the signal that the reversal may be coming. Reversals don't occur after every doji candle. These doji candles can sometimes indicate a temporary pause in the trend. The trend can again resume as it has happened here. Reading and understanding the Heikin Ashi candle is the fundamental to our strategy. Now that we have understood what is a Heikin Ashi and how to read Heikin Ashi charts, let's have a look at Heikin Ashi strategy that we can use to take trades. This strategy focuses on capturing the impulsive moves in the direction of the trend. Our goal is to identify the pullbacks and enter when price resumes in the trend. To trade this strategy, we first need to identify the trend of the market. For that purpose, we are going to use exponential moving average. A moving average is the line that represents the average price of the asset over a specific period of time. For example, if you are using a 50-period moving average, it will show us the average close price of the last 50 candles. Different moving average give us different trends. Here is what I mean. 20 moving average or 50 moving average will give us the short-term trend. 100 period moving average will give us the medium-term trend, and 200 period moving average will give us the long-term trend. This strategy will work on any moving average, but for this example, we are going to use 100 period moving average. So to plot the moving average, go to indicator section of TradingView and type moving average. And select this one from here. Insert 100 length from the settings and we are all set. When the price is above 100 period moving average, we are in the uptrend and we will only look for the buy trades. Similarly, If the price is below 100 period moving average, we are in the downtrend and we will only look for the sell trade. Here is how our buy setup will look. We have these two green Heikin Ashi candles here. As you can see, both of the candles have no wick on the downside. This indicates that there are no sellers present in the market. When there are two green candles with no wicks at all on the downside, it is a very bullish sign. It's a clear sign of buyer's dominance. The most important thing here is that we need these two candles after we get a pullback towards 100 period moving average. So here is how we can take the trade using what we have learned so far. The first requirement for us to take the buy position is that we first need the market to go higher than our 100 period moving average, which we did here. Once we go higher than 100 period moving average, we then need to create a higher high. Right after we went higher than 100 period moving average, we created this higher high here, and after this higher high, the third requirement is that we need a pullback towards our 100 period moving average. When we created this higher high, the market started to make a pullback towards our 100 period moving average. So we have the market staying higher than 100 period moving average. We have created a higher high. We have made a pullback towards our 100 period moving average, and then once there is a pullback, as I said earlier, that we need two green Heikin Ashi candles right after the pullback. So we have our two green Heikin Ashi candles here. The moment we will see these two Heikin Ashi candles, we are going to place our trade from here. We will place our stop loss just lower than our 100 period moving average, and our target is going to be at the higher high area. And this is how our buy trade will look like. We have placed our trade right after the second green Heikin Ashi candle that we got with no wick on the downside. We placed our trade here, we placed our stop loss lower than 100 period moving average, and our target is at the higher high area which we created after the market went higher than 100 period moving average from here. It was more than 1.5 risk reward ratio trade that we got for the buy side. Let me repeat it one more time. For us to take the buy, we need the market to go higher than 100 period moving average. The second requirement is that we need to create a higher high. We went higher than 100 period moving average from here. We created our higher high here. After our higher high, we need the market to make a pullback towards 100 period moving average, which we did here. And when there is a pullback, right after we get a pullback and we come near to 100 period moving average, we need two green Heikin Ashi candles with no wicks on the downside, which will show the buyer's dominance. We will place our trade after the second green Heikin Ashi candle. We will place our stop loss lower than 100 period moving average, and we will place our target at the higher high area. Now let's see a trade example for the sell side. Here is our sell trade setup will look like. We have these two red Heikin Ashi candles with no wicks on the upside, which shows a lot of strength for sellers in the market, and it also shows that there are virtually no buyers present in the market. It is a clear bearish sign. Now as we know that we need these two red candles with no wicks on the upside after a pullback towards our 100 period moving average. And when will the pullback happen? It will happen when the market will go lower than 100 period moving average, and then we create a lower low. So the market, it went lower than 100 period moving average from here. We started to go way lower than that, and we ended up creating a big lower low from here. When we created this lower low, we started to get a proper pullback, and we got our pullback towards 100 period moving average from here. So we have the market going lower than 100 period moving average, we have our lower low area, and then we have our pullback. The fourth requirement is that we need two strong Heikin Ashi candles for the sellers after this pullback with no wicks on the upside. And we got our second Heikin Ashi candle here. So we are going to place our trade here. Our stop loss just above 100 period moving average, and our target at the lower low area will be a very nice opportunity. And again, it will be a 1.5 risk reward ratio trade. Now let me repeat it one more time. Then I will show you one more example for the buy side so you can understand it even better. For us to take the sell position, we need the market to go lower than 100 period moving average. The second requirement is that we need to create a lower low, which we did here. When we created a lower low, the market has to make a pullback towards 100 period moving average. We have our pullback from here to here. When there is a pullback and market goes near to 100 period moving average, we need two strong red Heikin Ashi candle with no wicks on the upside. We got two strong Heikin Ashi candles with no wicks on the upside, and we are going to place our trade after the second Heikin Ashi candle, and we placed our trade from here. We are going to place our stop loss higher than 100 period moving average and our target at the lower low area. Here is the last example of using this simple and most profitable Heikin Ashi trading strategy. We went higher than 100 period moving average from here. We created this higher high. After we created this higher high, market made a pullback towards 100 period moving average. Right after the pullback, we got two strong Heikin Ashi candles with no wicks on the downside at here. So what we need to do, we need to place our trade after the second Heikin Ashi candle, and we are going to place our stop loss lower than 100 period moving average, and we are going to place our target at the higher high area. It will again be a 1.5 risk reward ratio trade. So let's see how it plays. You can see that we made a decent 1.5 risk reward ratio again using this simple Heikin Ashi strategy. So I hope that you guys understand what is a Heikin Ashi, how to read Heikin Ashi candles, and how we can use this simple strategy for our advantage to take the buy and sell trades. If you got value out of this video, feel free to hit the like button and let me know in the comment section on what topic you want me to make my next video. Thank you for watching, guys. I will see you in my next video.